What's up, everyone? It's Caddy with MoneyVest. So get ready for yet another crazy week in the markets, because not only do we have a week that's filled and packed with earnings, including Apple reporting their numbers, but we also have the Fed meeting. We've got unemployment numbers also coming out, as well as the consumer sentiment and some of the other important metrics such as the unemployment rate and the JOLTS numbers, and the ADP unemployment report also scheduled. So it is going to be packed with a lot of earnings and economic data. So in this video, I'm going to break down everything to look forward to, which day, what time, and also go over the technicals for the upcoming week as well. So hope you guys enjoyed this video and find it helpful. All I'm asking in return is that you drop a like and of course subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining. There is a 16% annual discount that's available till the end of this month. So for 2 more days, you can access all the benefits and take advantage of that discount as well. And there's also educational courses that are currently on sale up to 50 to 60% off. The coupon code is going to be Halloween, and that's going to be available till November 1st. So after midnight, October 31st, this will expire as well. So if you ever wanted to enroll and get lifetime access to a lot of these lectures, educational material, and of course be able to download our spreadsheets and play around with those numbers, links are going to be down below, and we'd love to have you on board. So first things first, let's talk about the earnings. There's a lot of companies reporting, right? So it's pretty packed over here. So we got SoFi, we got McDonald's, One Semi also reporting on Monday before the bell. We got Arista Networks, Pinterest reporting after the bell on Monday. Tuesday, we are packed with Pfizer, AMD, we got First Solar, Caterpillar, we got JetBlue, we got Paycom, to name a few companies that are going to be very important for the market. And then Wednesday, we've got CVS Health, we got Roku, we got Qualcomm, we got Supermicro Computer, we got Solar Edge, Airbnb, Etsy, Mercado Libre, and then we got ELF, and then of course, not to mention the most important stock of them all, PayPal. I did a video on PayPal yesterday. And then Thursday, we've got Palantir, Shopify, Eli Lilly, we got Novo Nordisk, one of my favorite companies in the Netherlands, Moderna, Crocs is reporting, Cigna is going to be there, and then the biggest company in the world, publicly traded company in the world, we've got Apple reporting after the bell on Thursday, along with Block, we got DraftKings, we got Carvana, Fortinet, very, very important cybersecurity stock, Starbucks, Coinbase, Cloudflare, all of them on Thursday after the bell. Thursday is going to be pretty important because I believe Thursday also is when the Fed meeting is, or it might be Wednesday. It's on November 1st, so whatever November 1st ends up being. I think it's going to be Thursday, but I'll have to double check. Fubo TV is going to be reporting on Friday. And those are all the earnings that I'm particularly going to be interested in. I'll be probably doing a lot of videos on these companies. And this right here is going to be the economic calendar. So Thursday, November 2nd, it's actually November 2nd. So November 1st is when the Fed meeting is going to be taking place. So Fed Chair Press Conference at 2:30 p.m. Eastern. We'll get to that in just a minute. But before that, we've got unemployment numbers to take care of. So on Tuesday, we've got consumer confidence, Chicago PMI, employment cost index, all those things, Case-Shiller home price index coming out at 9 a.m. But the more important numbers are going to be this right here. The JOLTS numbers, which are basically going to tell us how many job openings there are. Construction spending, we got ISM manufacturing index, lots of bond auctions, as we know that there's next week also the refunding announcements from the fiscal department, the treasury department. That's going to be very important. Mortgage applications and the ADP employment report. And then finally, of course, the FOMC announcement at 2 p.m. Eastern and the Fed Chairman Jerome Powell's speech and conference at 2:30 p.m. Eastern. I will be live to cover both of these things that are very, very important. Of course, market moving events. And then, of course, we got jobless claims, productivity costs, factory orders, and Friday, which is the first Friday of the month, we've got the unemployment situation, right? So it's going to be pretty volatile, I think. There's a lot of market moving events happening, earnings, not to mention unemployment, the Fed speech, employment situation, and what the Federal Reserve actually ends up doing with respect to interest rates. So JOLTS, the expectations are 9.375 million, so it's expected to come down from 9.6. We did see a bit of an uptick in the previous numbers, and I'm going to be doing a separate video on the unemployment numbers, which I think is going to be very, very important. So don't miss out on that video, because it's going to go over what is the Federal Reserve really looking for in terms of that ratio that we have talked about, and what needs to happen so that the Federal Reserve can finally back off from raising interest rates. Right now, there's still, a lot of back and forth whether the Federal Reserve is going to raise rates or not. But in that video, I'll go over exactly what needs to happen in order for the Federal Reserve to finally be done with raising interest rates. And it's also going to draw a lot of correlations, because unemployment is really the most important leading indicator, more specifically initial jobless claims, that kind of feeds into the JOLTS and the unemployment rate as well. And that's what's really going to dictate whether we see a recession or not and how severe it could be. And if you do see one, what's going to be the average sell-off in the market. So another video, it's going to break everything down from an unemployment and macro perspective. Do not miss that video. I think it's going to be very, very important. ADP employment report, 89,000 was the prior number. 150,000 jobs added in the month of October is going to be that consensus for next week. And unemployment numbers expected to stay steady at 3.8%. So no changes expected. Manufacturing payrolls, though, is expected to decline significantly by 23,000, and the 183,000 is going to be that overall non-farm payrolls month-over-month increase, which obviously is going to be almost half of the prior number of 336,000. Private payrolls expected to increase 143,000, and both average hourly earnings month over month and year over year are expected to be around 0.3% and 4% respectively. Now, this is the Fed meeting, October 31st and November 1st. October 31st is when the meeting begins. November 1st is when Chairman Jerome Powell is going to be giving the speech along with the statement for what they're planning to do. And as I said earlier, right now there is, again, 99.9% probability the Federal Reserve is not going to do anything to interest rates going into next week. But that can obviously change depending on a lot of different things. But the market has more or less been right about the short term, which is what the Federal Reserve is going to do next week or next meeting, but it's been almost always wrong what the Federal Reserve is going to do in the next few months to a few years. So, in my previous video, I mentioned that, there is always expectations from the market and what the Fed is going to do, but over the long term, that's almost always wrong or incorrect, but it's always right, almost always right when it comes to the short term, which is next few meetings. So this might still happen. It's possible the Federal Reserve, keeps rates steady. And I think that's, 99.9% is pretty much a done deal at this point. But these rates right here are still open, right? In other words, they can still obviously go higher from here, given the inflation numbers, given the unemployment rate, given the economic expansion. 4.9% GDP growth with a 3.8% unemployment rate. Both of those things scream for a very strong economy, while inflation continues to be a little bit more on the elevated side, which is higher than the Fed's target. So, next week, it's going to be very important what Jerome Powell ends up saying. His choice of words is going to be what's going to move the market, not so much the exact rate itself, right? Whether they hike or they pause. Of course, if they hike, that's going to completely throw off the market and catch the markets off guard, and that could really result in a significant sell-off. But if they do pause, but then what is going to be the path moving forward and how they are interpreting all the data that's coming in is going to be the important piece and the market moving event. So that's where we are. Now, in terms of technicals, we've already talked about how we are in a consistent downtrend. The next support for the S&P really is going to be 4,045, 4,050. I did a video on this yesterday on the technical analysis, so make sure that you do check that out. But that is going to be that next support at 4,045, with the resistance now sitting at 41.75 for the S&P 500. So again, this is going to be that level. We're starting to break down below the 200 SMA. We're breaking down below a very critical area of support of 41.75. And the next level is going to be 4,050 for the S&P. And the NASDAQ also in a very similar situation, where 12,250 is going to be that next level to watch, although there is some support exactly where it's sitting at the moment, which is going to be 12,650 levels, right? That's going to be in line with this previous support that I also mentioned in our yesterday's update. So previous support now potentially acting as a support here, 12,600, 12,550 around those levels. And if you do end up breaking down below, next level is going to be right here at 12,250 levels for the NASDAQ. So hope you guys enjoyed this video. And again, we are a little bit more on the oversold side. So again, given, next week's volatility, given next week's expected move, again, I don't want to make a prediction, but I would not be surprised if you do see a little bit of a technical rebound, unless the Federal Reserve throws cold water on that potential rally, right, on Wednesday, which is when they actually speak and they issue the statement. But there is a possibility. The risk rewards are pretty aligned at the moment for a technical rebound, given how the oversold we are, given how aggressively we've been selling off, and there's a lot of tech stocks and big tech more specifically trading at a very critical area of support. And of course, we've learned from percentage of stocks trading below their moving averages. Majority of them are now trading below their moving averages. So from a technical perspective, the market is incredibly oversold at the moment. So a technical rebound is possible, but again, nobody knows what's going to happen. So I don't want to make a prediction, but those are going to be some levels to pay attention to going into next week. So get ready. It is going to be packed with a lot of stuff. Hope you guys enjoyed this video. Don't forget, we do have the Halloween sale right now. Coupon code Halloween, 50 to 60% off on individual courses and on the bundles. You get lifetime access, over 40, 50 lectures, and I'm constantly updating these with the new information and new spreadsheets that you can download and, of course, access it yourself. Link's going to be down below. As always, if you enjoyed it, found it helpful, make sure that you drop a like, subscribe to the channel. 16% annual discount on the Patreon and the Discord as well until the end of this month. As always, happy investing. I'll see you all in the next video.